Hey guys, welcome back. It's Randy Hatata here at Xpand Realty, bringing you your February real estate market update here in Las Vegas. So the headline is UFO sighting, spotted by yours truly, this guy. Yep, you heard me right, UFO sighting. And well, it started off as a UFO and we later confirmed that our unidentified flying object happened to be a SpaceX rocket that launched from Santa Barbara that came over the Las Vegas atmosphere. And I coach my son's baseball team. Well, I'm one of the coaches. And I remember one of the boys saying, "What's that in the sky, coach?" And I said, "Please pay attention. Let's focus on the practice." And then I looked up and I said, "Oh my God, what's that in the sky?" So kind of funny, but we did see an unidentified flying object until it was confirmed later that SpaceX had launched a rocket. Or maybe I just wasn't in tune with what was going on, but it was quite the scene. I don't even know how to describe it. Quite the experience, especially not knowing what it was. All right, headline number 2. Record highs here in Las Vegas. What does that mean? It means that our housing market hit a new record high this past January, topping May's last market high, creating our median price point of $485,000, which was $3,000 higher than the last price point or market high in May. So congratulations to Las Vegas. Well, whether that's good or bad news, it's to be determined by you, because the answer is very subjective, right? And so is it a great market to be in or a bad market to be in? That really is up to you. You can decide that. But here's the facts. The facts are that our median price point's at $485,000. That's up $10,000 from the month prior, and that's up 9% year over year. So I don't know. Congratulations to Las Vegas, I guess, is in order. And whether that's in good or bad news for you, you let us know. As far as units sold is down to 1,578 units sold, which is down 233 units from the month prior. But we must remember that the January numbers reflect what happened in November and December, because most of the transactions take 30 days to close. So when we look at units sold, it's from those acceptances that happened in November, December, which happened to be slower holiday months. And so as expected, the units sold in January was less than the prior month again by 233 units. But what is also expected is that we'd have a lot more listings in January. And reason for that is that I think a lot of sellers are trying to or did avoid listing their properties during the holiday months, or they were advised by their realtor not to list during the holiday months. And the sellers that had the flexibility to wait have listed it now in January. With that being said, January listings is up to 3,130 listings. That's up 1,376 listings, up 28% from last year. So a lot of new listings as expected. I can tell you that seller confidence is up because not only have all these new listings hit the market, but they're asking $25,000 more than the month before. And your new median ask price is The new median ask price is $525,000, and the median sold price again is $485,000. So that's quite the difference. And I think that a lot of sellers expect the market to pick up the first quarter of this year. And normally on a national basis, spring is the best time for sales. And so I think this is expected across the board. As far as units available, we're up to 5,250 units available. And so that's up 250 units from the month before. But year over year, that's up almost 50%. So a lot more units available, and our effective availability or our month supply has also increased to 3.3 month supply. And that's up 37%, almost 40% year over year. So in summary, we have a lot of units available, and I think that's going to continue to climb as we approach spring. I think a lot of sellers are expecting a great market happening this spring, and so are we. in the fact that we do expect a lot more buyers buying and a lot more closings happening. Now, some huge things that came out in some past reports is that third quarter of last year, we had over $1 billion in investor sales. Yep, you heard me right, over $1 billion in investor sales in that 3-month period last year, which makes us number one in the country for real estate investment. Yep, residential real estate investment. So the long story short is that the investors are very confident in Las Vegas investments, and the buyers, especially investors, are here buying right now. Some of the buyers do include hedge fund monies and institutional funds, but in general, consumer confidence is up here in Las Vegas. So with that being said, I think that even if units continue to rise or inventory continues to grow, sales will also continue to grow, offsetting that. And my opinion of the matter is that we'll maintain about the 3 to 3.5 month supply of inventory for the next couple of months. Again, I expect more inventory to happen and more sales to happen, offsetting each other. So I think we're, approaching a little bit more of a balanced market. And what's causing the market sales to go up and sellers to list? What are their where's their confidence coming from? It's really the fact that people are continuing to move to Vegas at a very, very high pace and volume, with the majority still coming from California. I might have said this last podcast, but there's 40,000 people moving to Las Vegas every year, and that number has probably gone up. In fact, I know it's gone up, unfortunately, from the fires in California. And so we are feeling the effect of those fires, and we are having more people who have unfortunately lost those homes to these fires relocate here in Las Vegas. And it is affecting our luxury market. And my opinion of the matter is that it's going to affect mainly the $1 to $3 million mark. I think a lot of people who have lost those homes from those fires are coming from very high-end areas, including Malibu and all of that. And to maintain that lifestyle, they're just simply buying luxury product here in Las Vegas. Of course, it's not the same prices in California, which is probably why they're moving to Las Vegas as an alternative. They can maintain the same type of lifestyle, or at least as far as home ownership that they're used to, less the ocean, of course, for a much lesser price. And so we see the trend. I think that it's going to continue affecting the rental market more than the sales market at first right now. And as these California residents that have been affected by the fire financially get back on your feet, get reimbursed through insurance, hopefully get reimbursed through insurance, and get their financials back in order, I think a lot of these people who have become renters will then convert to home purchases. And the ones that are ready for home purchase are already making the move. So this has put a big dent in Las Vegas, and I think will continue to change our luxury market as we know it. As far as condos, it's kind of strange because condos are in a completely different market. Right now, our unit sold is 413 condos, which is down 53 sales from the month prior. And our median price point is $293,000. That's up $3,000 and up 6.5% year over year. New listings has gone up by quite a bit, and it's up by 347 new listings to 955 new listings. So it's up about 30% from the month prior, which is a huge jump. And new listings is up 22% from last year over year. With that, the median price point has actually gone down the opposite way to $290,000. And that's down $20,000 from the month prior. So what that means is that our sellers are asking less with their new listings than they did in the past. And they're settling for about the same amount in sales prices. And so why is this happening? I feel like this is happening because a lot of our condos and townhomes are owned by investors. And being that we're coming off another market high, a lot of investors are using the opportunity of a market high to liquidate their investments. And so by doing so, there's a lot of inventory. And when we talk about inventory, there are 1,900 units available. So we're up from 3.8 month supply from last month to 4.6 month supply this month of month supply of inventory. And that's up 92% year over year. So almost double the inventory we had last year. And again, what's causing that? I think a lot of investors are looking for the sure thing in order to cash out their investments. Most of them have a lot of equity and have done very well over the years, and they are liquidating to take the sure thing. Now, with that being said, there's a lot of investors, like we talked about, in our market investing. So there's a lot of moving and shaking going on with investors. A lot are buying and a lot are selling, and so it's a very, I'm going to call it a healthy market, and we'll see where this goes, but we do expect more listings to come from both single family and condos over this spring, and we do expect sales numbers to increase as well. Home sales have been pretty consistent. They have, again, I've talked about this over the last few podcasts, they've created their own market, and they've done so by controlling supply, meaning the supply of homes that they're releasing at one time. And being that demand is great, they've created their own market, and there are people waiting in line for new home sales in many communities. Not all communities, but many communities. Luckily, they're still offering incentives, so make sure that you're talking to your realtors about what incentives they're offering. And there are still potential negotiations going on with new builders, but again, they're in a very different market than the resale market. So something to talk to your realtor about. Both markets have opportunities on both sides of the fence. You just need to understand what they are, and more importantly, what you're trying to accomplish. And what I mean by that is, like, I've had weird conversations, not weird to me, but just it's gonna sound weird to you. And the fact that I've had investors ask me if it's a good time to sell, and discussing where I feel the market is going in the next 5 to 15 years, which is longer term. I've convinced them to hold. But not only hold, now they're asking me about purchasing based on the potential appreciation and growth of Las Vegas. So it's crazy how someone looking to sell because they heard that we're at a market high has shifted into acquisition mode on the same conversation. But these are conversations we're having with these investors. And right now there may be opportunity for negotiations, getting better deals. And the real question comes down to, for investors, is the numbers going to get better or worse in the future? And my opinion of the matter, or hypothesis, is that in the long run, numbers are going to get better for investors, meaning, well, I should use a better word. Appreciation is going to happen and prices are going to go up in the future based on our population growth, projects that are coming to the city, and the need for employment on top of relocation. So with all that being said, supply is limited, demand is going up as we speak. And again, unfortunately, the fires has sparked more demand for Las Vegas. There are a couple communities that are currently being released. In fact, there's a major master plan that's going to get released, 110 acres in the north side of town. Is that enough to scratch the surface to fulfill the need for relocation? For now, the answer is yes, but in the long run, that's going to run out as well. I mean, last month I shared that builders are reporting about 8 months of buildable land left. And again, there's a new community coming and a couple more infills as well. But just to reiterate, land is limited here in Las Vegas because we're in a valley, somewhat landlocked. And the rules for the county and state are that we don't build into the mountains. Are there exceptions to the rules, and will those rules change? Probably, and there is certainly exceptions. But right now, as far as buildable, privately owned land, again, builders are reporting an 8-month supply of inventory, which is, not 8 months, 8 years supply of inventory, which is right around the corner. As far as the demand side of things, we are at 2.45 million people, just shy of 2.5 million people as far as population here locally. And we are expecting that another 500,000 people in the next 10 to 15 years based on the US Census and UNLV studies. So when we talk about supply and demand, the numbers sound big and 8 months sounds long, but in the long run, we simply don't have enough land to fulfill this 500,000 people that should be coming to Las Vegas if our sources are correct. And that's why I strongly feel that prices will continue to grow. Now, all of this is happening with interest rates where they're at, which is, in the 6 to 7% range, and for investors, a point more. So the long story short is that buyers are confident buying today and comfortable buying today with these interest rates. Should interest rates change, of course, it's going to lead to a change in our real estate world. And real simply, if interest rates go up, I think our real estate market will slow down. If it goes down, and I'm talking like a point or more, I think our market is going to completely blow up in the favor of owners, meaning that prices will skyrocket very, very quickly. More and more, we're seeing remodels and reconstruction, meaning people are tearing down old to build new, just simply because there's not that much land left. You'll find that a lot of areas that offer half-acre, 1-acre properties that are central here in Las Vegas are also running short, and the prices for land is also pretty high right now based on history. So again, all based on supply and demand. I know you know that, but it really truly comes down to those simple laws that create our market today. Today I skipped a lot of what the economics behind what's happening in Vegas. I think we went over a lot, the last podcast, and I just wanted to specifically talk about our housing market, especially because of this new record. And I do think that it's going to be higher this spring based on the expectation of closings that we are expecting. Let's just put it that way. So a lot of this, again, no one has that crystal ball, and a lot of these are hypotheses, but this is what I'm thinking personally, and this is the discussion we're having with our team. If you have any comments, please comment below. I know Vegas isn't for everyone, guys, and it is what it is. With that being said, people are still coming and testing the waters, and more people are coming than leaving. So there you go, Talk to your realtor about the climate. Do your research about if Vegas is for you. More podcasts to come to let you know more about Vegas so you can make a more educated decision. I would say if you're ever in town and in the market, if you don't have a realtor, drive around town. Take a look at the different areas, Get yourself familiarized. The good thing about Vegas is that a lot of the research can be done online. You can look up school ratings, you can look up crime reports, you can look up master plan communities. And then you also have people like us that can certainly give you inside information and some real life working experiences about all of the above. But don't be afraid, reach out, comment below, and we're happy to continue adding value and answering your questions. If you have any other requests for different podcasts, comment below, but we have a lot more coming for you. Thank you for joining us. Looking forward to this spring. Take care.